Hey, what is going on? Welcome back to the channel. Today we're taking a look at Nuls. I do want to say that I'm not a financial advisor. Do your own research before investing money into crypto. Now, we have done a fundamental review on Nuls. You can check it out in the top right hand corner of the video. And it seems to be pumping very nicely. So this is a candle, a 262% candle in a day, which is quite impressive to be honest with you. But I think the pump has something to do with their announcement on Twitter regarding Nuls swap. And, they're doing pretty well right now. So obviously, you don't want to be buying into these big candles. And people usually tend to do that. I would advise against that, but I'm not a financial advisor by any means. You want to be buying these dips over here, and you want to be buying consolidation periods, right? And just dollar cost averaging through that. Now, I have set up a fib over here on the daily chart from the swing high in April to the swing low in July, and we just couldn't get above the 0.382 over here, right? We couldn't get above 63.5 cents, but right now we all of a sudden blasted through the 0.5, the golden ratio, the 786, and we almost had a retracement, a full retracement to the previous swing high over here at $2 and $2 exactly. So what do you do if you want to get involved in the project, or if you've been waiting for a pullback and you just, didn't catch it and now it's pumping, you're scared? Well, obviously it may not come back down to these levels that we have over here. The EMAs have gone vertical on pretty much the 4-hourly and the daily chart. So yeah, like I said, buying in right now is unhealthy, and I don't recommend it. I'm not going to be buying in right now. So what you should do is you should look at support levels. So the first support level over here is at 63.5 cents, the level that we couldn't break through. So you may potentially come back down all the way down here. And you may think to yourself, well, that's quite the pullback after we've gone so far and so high. Well, yeah, but that tends to happen, right? You get too overextended and you come back down hard as well. So I would expect a bounce off this 382 because we've held it as resistance for so long and now we broke above it. You want to backtest it as support to confirm that we are in an uptrend and then move along the other levels nicely. So if you are not going to be waiting this long, there is another level over here. You can see the 0.5, which by all means we can hold this level as support and continue on with our uptrend. So this is sitting at 79 or 80 cents, and this is the 0.5. This level has the most resistance after the golden ratio. So you potentially can come back down here, obviously, and hold the level of support. If you start losing it, look at the 0.382. And right now we're just above the golden ratio. We may see another pump. And right now is a pretty good time to start, dollar cost averaging your way out of the project if that's what you're looking to do, if you're into taking profits right now. So if you had the fib up, obviously you could have set the sell orders at the 786, at the golden ratio. So if we have another strong move towards the upside, I would take some profits and just buy back in lower, obviously, because this is not sustainable over time, right? In a couple of days, you're just going to be down here, right? I may be wrong, but usually 9 out of 10 times, that's what happens. And just because people see these big candles, just because they see these big candles, they think that's going to continue on throughout the week, and it's not going to retrace to levels of support, but that's where they're wrong, right? So yeah, this is going to be our level of support over here. If we jump into the daily RSI, you can see it's pretty overextended over here. So we're in the overbought on the daily RSI, strong move to the upside. So I would look at, and actually if you pay attention, you can see that you've had this horizontal resistance over here for quite a while actually. And right now you've broken through these horizontal levels over here, and you want to back test them as support. So potentially what you're looking at is you want to land on either of these blue trend lines over here. And because you've broken them as resistance, now you want to back test as support, right? And then make your way through the next resistance levels. But if you lose this one, you can come back down to the lower one and, continue on. But obviously you can even lose the lower one and come back down if you start losing these trend lines and just dollar cost averaging, right? But there is a potential that we just might bounce off of either of these levels. Now, jumping into Binance on the 4-hourly chart, you can see that we were in this large symmetrical triangle over here, and the target from that triangle was 95.95 cents basically, and that target was met, as you can see. So right now we've actually opened up a new 4-hourly candle, and let's just see what's going on over here with the oscillators. So obviously, yeah, all of them are pretty overextended. The MACD is overextended. The stochastic has gone up pretty parabolically over here, but you should be taking profits in these zones, right, rather than buying in, because a lot of people are going to start FOMOing in. And, when you're this overbought on the 4-hourly chart, like, come on, dude. I mean, be reasonable, man. But obviously, that's if you're going to take profits, right? If this is a long-term hold for you, 4 or 5 years down the road, then this has no effect on you whatsoever. But if you bought in over here and you're looking to take profits, this is even though you didn't catch this wick, right now is a pretty nice place to take at least some profits, in my opinion. Not a financial advice. Although, like I said, with this amount of hype, we can just, have another move towards the upside. Create a bearish divergence on the 4-hourly chart, and after that carry out the pullback, obviously. So if we just look at what we have over here, so this symmetrical triangle, this resistance line was a resistance line for quite a long time, ever since September, and we were making higher lows and lower highs in a symmetrical, and we broke out. So now what you look for is a back test of support, so you potentially can come back all the way down to the triangle, right? That is still on the plate here over, and just because we got so overextended doesn't mean it can't happen. It can happen, and well, let's see. Hopefully it doesn't go that low, obviously, yeah, but I would look for the 4-hourly 20 EMA and the daily 20 EMA as support, because those need to hold, right? If those fail, look for the 55 EMAs on both the daily and the 4-hourly charts. Other than that, that's pretty much it. If we jump back into the trading view, so jumping back into trading view, I just want to give you the long-term targets based on the fib over here. So if I take the 1.618 level, that is $6.30 over here, and that is only after we start breaking this swing high over here. And after you've broken above this swing high, you back test it as support, you're in a target to $6.30. Before that, you do have the 1.414 and 1.272. You can have rejections from those levels as well. But usually once you break this level, you're going to get to the 1.618. And you can start taking profits a bit earlier. Obviously, it's up to you. But, this is our target. If the bull market gets extended, right, and the Nuls company has nice marketing, they get good news coming out for them, then you could look at the second fib level over here, sitting right at $12.80. Okay, so that's it for me, guys. Thank you for watching. I'm gonna catch you in the next one. Feel free to follow me on Twitter. I do technical analysis in there as well. We do have a Discord server and a Telegram chat, and we do have a Patreon. Make sure to check, all the links are below. Thank you for watching. I'll catch you in the next one. Goodbye.